Have you ever considered not working with a financial advisor? Excuse me? I bet you never thought you would hear that from a financial advisor. But here's the thing, I am not arrogant enough to think that everyone needs one. In fact, some of you might be better off managing your finances on your own. In today's video, I'll guide you through the specific questions you should ask yourself to determine whether you truly require a financial advisor and if spending your money on one is getting you the most value for your dollar. As always, it's your favourite Scotsman here again, and let's get stuck in with the first question. Are you comfortable managing your retirement portfolio and staying educated? If you answered yes to this question, you'll likely enjoy studying books, enrolling in courses, and diving into the nitty-gritty details of financial strategies. You're confident in managing your investments and rebalancing when needed. You're also well versed in tax strategies and are confident in your retirement withdrawal plan. Oh, and you've got the discipline to stick with your plan no matter what the markets throw at you. Fair play to you if that's the case. But if you're sitting there thinking, not really, that's perfectly fine too. Not everyone has the time or patience to keep up with this stuff. Even if you have the time, some of you may not find it particularly enjoyable, and that's okay. You also have to consider that trying to do it all yourself without keeping up can sometimes cause more harm than good. Have you ever tried to fix something, such as your car, boiler, or DIY project, only to realise halfway through that you should have just paid somebody to do it? Yeah, it's exactly like that. Which brings us nicely on to the next question. Are you confident in avoiding common financial mistakes? I just mentioned taxes. You might be well versed on the investment side of things, but do you have a tax strategy? Nobody wants to give the CRA more than they have to. And of course, there's a classic trap of underestimating or overestimating how much you'll actually need in retirement. I see some people still grinding away when they could have retired years ago. On the other side, there's others that get a wee bit overexcited and, get buoyed by recent market returns and spend way too much too soon. Sticking with that topic, I often see overly aggressive portfolio allocations heading into retirement. Having an aggressive portfolio allocation is fine in your 30s or 40s when your savings are minimal and you've got decades until retirement. Tightening that up and being a little bit more safety first heading into retirement is well advised. Which brings us nicely onto the third question for today. Can you manage your emotions during market volatility? Now, look, I get it. This one is not easy to think about. Most of you are probably sitting there saying, of course I can handle my emotions. I'm a grown adult and I don't need some daft Scotsman telling me otherwise. Fair enough, but humour me for a minute. Ask yourself this. How have you handled past downturns? How do the daily ups and downs in the markets make you feel? Do you get that itch to sell when things start heading south? And here's the big one. Are you ready for the next market crash? Because let me tell you, it's not a matter of if, but when. You'll have limited time to recover from losses if you're close to retirement. And if you're already retired, well, what you have is what you have. That makes the stakes even higher. Now this ties back to what I mentioned earlier about having the right portfolio allocation as you approach and move through retirement. Let me put it this way. If you're sitting in an all equity or aggressive portfolio, are you prepared to see your $1 million portfolio drop to 500,000 in a 50% market crash? Extreme example, maybe. Could it still happen? Absolutely. If your answer is, I've got this, then fair play to you. But if you're thinking, I might struggle with that, then having a good advisor in your corner can make all the difference. And if you think you need a steady hand to guide you through the chaos and help you make decisions that benefit you and your family in the long run, click on the link in the pinned comments below to book your retirement strategy call with me today. Alright, sales pitch over, back to it. The next question today is, do you feel confident that your retirement plan is solid? Now, this is where the rubber meets the road because let's face it, the devil's in the details. There are so many key questions that can make or break your plan. And without solid answers, you could be in for a few nasty surprises. Let's ask a few questions. Do you know when to claim your CPP or OAS so you can squeeze the most out of those benefits? Are you confident in how much you can spend each year without running the risk of draining your savings too soon? What account should you draw from first? Have you factored in inflation? What would happen if the inflation rate remained higher than expected? Or if you lived to age 100, because plenty of people do these days? Sure, we have universal healthcare here in Canada, but what about the stuff that isn't covered? And here's the big one. What happens if life throws you a curveball? What if your spouse passes away? You lose your job? Or where's the money coming from for those big, one-time, unexpected expenses? The thing about these questions is they don't come with textbook answers. They all depend on your specific situation. That's where a good financial planner makes all the difference. They walk you through finding the answers so you're not left guessing. Next up, and this one's important, is your spouse on the same page? You might be sitting there feeling pretty good about your financial plan. Maybe you've got it all figured out and you're confident in how things are shaping up. But what about your other half? Are they just as clued in and comfortable with managing the finances? Typically, there tends to be one spouse who takes the lead with the family finances. Let's face it, not everybody enjoys spreadsheets and strategy sessions. Some folks just want to know the bills are paid and the money's sorted. And that's perfectly fine. But if your spouse doesn't agree with you now, it could lead to significant issues in the future. Life happens, and if something unexpected comes along, they might need to step in. Are they ready for that? Do they know what to do? These are questions worth asking, even if it's not the most fun conversation. That's why getting a financial advisor involved early can make such a difference. It's not just about managing the numbers. Talking to someone about your money and making money decisions is such a personal conversation. So having that established relationship can make sure both of you feel secure and prepared for whatever life might throw at you. Alright, let's move on to the last question for today. Are you confident in your estate and legacy planning? This one's about more than just finances. It's about making sure that the wealth you've worked so hard to build is passed on efficiently, with as little tax pain as possible. Do you have a solid place and plan for that? Things like wills, trusts, and other estate planning tools can make all the difference, not just for you, but for the people you care about most. Here at Bellwether, we take this seriously. That's why we have a life and legacy promise for every single client. As part of our service, we have a robust estate planning process, and all of our clients receive free wills and powers of attorney. It's just one of the ways we ensure that your legacy is protected and your loved ones are looked after. The world of financial planning can feel complicated and vague. Most people aren't sure where they stand or what type of financial professional they need. Let me break it down. Advisors tend to focus on investments, managing portfolios or recommending funds. Planners take a more holistic approach, covering tax strategies, estate planning, and retirement goals, basically everything that impacts your financial life. Then there's how they get paid. Fee-based or commission-based. Fee-based planners charge a percentage of the investments they manage or a one-time fee for creating a plan. You know exactly what you're paying for. Commission-based advisors earn money from the products they sell, which can sometimes limit the scope of their advice. At Bellwether, we are holistic planners who focus on your entire financial picture, not just your investments. We charge a percentage of the assets we manage and believe in long-term relationships to grow your wealth. This sounds like something you're looking for? Click on the link in the pinned comments to book a call with me today. Oh, and if you like this video and want to see what we work through with our clients when it comes to a retirement plan, then you don't want to miss this next one.